Magandang hapon, Tess.
Hi, Pao.
And
Welcome to episode 14.
14. I
Yeah,
know we've been slow with getting our recordings done. I know we've been both busy, so we keep having
busy.
to
Yeah,
reschedule, but it's good busy. It's good busy. We
yeah.
both have a lot on our plates right now. So let's get started on this episode. I figured that what we can
S-
touch on in this episode is the big thing about tariffs. Everybody's talking about it.
Yes, yes. Talk of Canada. Talk of the country. I guess both countries, I'll say.
That, a new prime minister, so many things happening right
Inflation, so many
now.
changes. Yeah.
Hmm.
So, yeah, let's get started. I wanted to hear what you have to say about
Yeah.
tariffs.
So, hot topic right now, tariffs. I wanted to make sure that everybody actually understands what tariffs are. Because everybody's like, oh, tariff this, you hear it on the news, you read about it, newspaper. Tariffs, it is the taxes that is put on imports and exports, right? So, for example, Trump right now is saying 25% tariffs, but he's been delaying it. He's delayed it, I think, the second month now. He's reviewing it again, or he's saying that it's going to come up on April 2nd. So that's next week. We're end of March right now. So that's definitely going to have a big impact on Canada, in the US. But the big question is, or I think the clarification I was going to say is this tariffs of 25%, who they? Because I think a lot of, or at least I feel like the Americans believe that when Trump says 25% tariffs, the Canadians will pay it when Trump announces that. But the reality is it's taxing the Canadian goods coming into the US. So for people that are in the US, so whoever is importing that product from Canada, that 25% is then paid by that importer. And obviously, that will drive up the cost of that product. Just to clarify that, so it's the American people that pays that tariffs that's announced by Trump. So now that Canada actually imposed retaliatory tariffs, so they're taxing goods that's coming from the US. Some of that's been implemented already because when Trump announced that in March that he was going to do that, like Canada did the can't even pronounce it,
Me too. It's like a
retaliatory
tongue twister.
tariffs on the American products. So that's implemented now that Canadians are paying that. So when our government puts that on American products, the Canadians will pay that. That's why now you keep hearing about the, buy Canadian products because those are on American products that they're putting taxes on. So Canadian
So,
peso
so
tariff.
chaotic. Yeah.
Hmm. I know those retaliatory tariffs can be controversial in terms of should we be doing it because we are taxing Canadian consumers. But I'm all for it because what the idea of it is to put pressure on Trump to remove it altogether, right? Because it will affect the American economy as well,
That's right. It
right?
just doesn't affect us. It affects both countries,
Hmm.
especially consumers, because it's being, I guess it's being, the tariffs are being passed on to them.
Well, if it continues, or
Yeah.
depending on how long it continues, it's going to affect inflation again because it's going to make products more expensive and it's going to drive up inflation and we're going to be back to where we were. Right? But why is Trump doing it? Ultimately, we don't know. Yeah, we're not going to get into politics
Yeah, it
here,
will
but
be,
the
well,
idea that he has, or the logical thought process is it's going to reduce imports from Canada and Mexico and other countries because he was just starting it with Canada and Mexico, and then he's going to start doing it with any other imports from around the world. And then he was going to create the industries within the US like how it was from before, and ideally it's going to increase their productivity there, it's going to increase employment. So but that's the big question, will that work, or are they structured to do that already to replace all of this products they're importing? I'm learning more and more now on how much we're actually exporting to the US in terms of energy and all of that. I think it's a good wake up call. I think on the brighter side of things that now we're going to promote more Canadian and also um, try
find more
to
sources.
yeah, or actually I never realized how bad it was in terms of trading between the provinces, right? So
Yeah.
now we're trying to open up our own borders, which I think is definitely a positive thing. So this threat of tariffs from the US is he postponed it to April 2nd. He didn't want to do it April 1st because he actually did say this because I was watching that he was concerned about making it like April 1st and
April
it's like an
Fools.
April Fool's. So that's the reason why he made it April 2nd. So that's what tariffs are. And, and how does this impact our, real estate and the mortgage market? So as of, was it last week or a couple of weeks ago, that the overnight rate, so what the Bank of Canada announced, that was last week, it dropped from 3% to 2.75%. Okay. So again, just for people, because every single time that this rate drops, people feel like that's the rate.
It's the rate.
That's what they're getting, right? So that's the overnight rate. The overnight rate is from the Bank of Canada, and that's what the banks borrow at, and then the banks then put that forward to the consumers, right? But there is a spread there. So 2.75 overnight rate, the prime rate is 4.95. And depending on the product that you have, if you're a variable rate holder, it's a discount under that. If you are a HELOC or a home equity line of credit holder, it's typically, average right now is about 0.5. So you're looking at about close to 5.5 on the home equity lines of credit. Variable rates now, depending if it's insured or uninsured, you're looking at, low 4s to about 4.6, depending on, just quickly, insured. When I say insured or uninsured, insured means that you're paying an insurance premium. So if you're paying less than 20% down, you pay an insurance premium, you get more favorable rates. And uninsured is if you're utilizing 30-year amortization, and now it's over 1.5 million. Those are uninsured rates. So, and then that's why you're on the higher end of that variable rate that I was talking about. So around low 4s to about 4.6. And so that overnight rate affects variable rate holders and the home equity lines of credit. Fixed rate mortgages follows Canadian bond yields. So that drop, it indirectly affects fixed rate mortgages, but as of right now, they're about 3.9 low 4s on the insured side, and uninsured, you're looking at low 4s to about 4.5.
It's very competitive. It's very close.
Yeah. And there's a big chance that it's still going to keep going down. These are the anticipations that I wanted to touch on next with all of this talks and everything. But obviously, whatever happens next week, April 2nd, we don't know. Everything that we're talking about right now could change. And depending on how long or if that's implemented, those tariffs, the Canadian economy and the US economy is both going to suffer if that continues and how long it continues for. So some of the future projections, so overnight rate, so what's being talked about is that 2.75 can go as low as around 2% or even lower. That means that the variable rates would hit possibly the 3% mark. I mentioned earlier that it was about 4%, 4.5%. It can definitely go down to low 3s.
No, for sure. That's the projection.
That's a projection.
It's still, yeah.
Nobody knows. These are all from experts and educated estimates, I guess.
Yeah.
So inflation, so one thing to watch out for too is the inflation. So inflation went from this is January to February, 1.9 to 2.6%. And just to remind everybody that the target was 2%. So there's about a 0.7 increase in 1 month. So that's definitely something to watch out for, because keep in mind that the reason why the overnight rate kept going up at 6%. I feel like now it wasn't that recent, but this was 6 months ago. So when inflation goes up, increases to that, we will have to increase the overnight rate to try to counter that, right?
Yeah.
So the next announcement for the Bank of Canada is, you mentioned the date earlier, Tess, is April 16th. Is that correct?
What do you think will happen, Pao? Do you think the rate's going to go down? I'm kind of iffy about it. I thought before it would be going down, but then with this big jump of inflation from 1.9 to 2.6, I don't know. I doubt that it's going to go down. I don't know. Maybe 0.25, but even then, that's still something that they have to watch, because it's going to impact everything. Yeah.
My guess would be, so depending on what happens next week, it's going to factor into that decision of the Bank of Canada. So April 2nd, they're going to like Trump is going to decide whether it's going to go ahead with the tariffs or not. I think if he puts that on, they most likely they will drop 0.25 because they have to counter that, because that's definitely, we're going to take a hit and consumers are going to take a hit. But if that doesn't, or if he delays it again, I think it's going to stay on hold, just because we have to watch where the where inflation is. Because now that it's creeping up, we can't allow that to keep going up. So they will have to kind of match how that's what happens to inflation. So they probably want to see what next month will be, or sorry, I guess this month being March.
I guess right now a lot of buyers have been wanting to ask any mortgage brokers, or what they should do. Should they choose fixed or variable mortgage? Like, which one is better? What do you think, Pao?
Variable rate is definitely the attractive choice right now, because you want to ride this downward trend on the rates. But again, that depends on each individual. I think it's the best option if you can tolerate volatility and the financial flexibility. But if you're already, your cash flow is already tight, I probably look for the best fixed rate option. So it depends on each individual, your own finance, right? So that's a conversation you need to have with your mortgage broker after seeing your finances. They should be able to recommend. If you have, if you're not tight on your budget and you can tolerate that volatility, then I would say go variable. But like I mentioned, that the insured rates right now are hovering a low 4s or under 3. I would consider that. I would consider that, especially
For
it's coming
fixed?
from over 6%, right?
Yes.
So
now that you say that, that's a huge jump, like a huge reduction from 6 to 3 point. Now you're saying if it drops to 3.25 to maybe high 3s.
Yeah. So on the fixed rate, if and when it drops to about 3.5, around that figure, I would recommend to lock it in. Like,
you're gonna let me know, right?
I will definitely let you know. Yeah. For being one of my variable rate clients, if the fixed rates are creeping up, I will definitely be reaching out to my variable rate clients, and one being Tess. So I will definitely let you know. Yeah, so that's the danger. So I have this conversation with a lot of people now that are like, oh, should I go variable or fixed? And just to point out that as a variable rate holder, you can always lock into a fixed, right? But where we need to clarify that is, you don't lock in, if you have a variable rate, it is convertible to a fixed, but you're not locking into whatever variable you have. So right now, let's say somebody has 4% and then it drops to 3.75%, the overnight rate. They can say, okay, I want to lock in. That doesn't mean you're locking at 3.75. You're locking in whatever the fixed rates are at that point. So that's where the danger is, right? Because you might be watching for the wrong news out there, because when the Bank of Canada announces that, it doesn't mean that the fixed rates dropped, right? So you have to be watching the Canadian bond market for that to happen, or better yet, you have your mortgage professional that you can call or you can get advice from, because as somebody that does mortgages every day, I know the news, I know where the rates are. So you can just say, like, you can, as for an example, Tess, you can be like, hey, Paulo, where are the rates are right now? Should I be locking in? And that's your best bet if you're doing that.
Yeah.
But keeping
just one
in
phone
mind, but also keeping in mind though, that it's hard to time, whether it be your mortgage rate, whether it be your investment, it's never advisable to time the market. So I would say once you get to a point where you're like, hey, that's a pretty good rate, and then you're comfortable with that, that's the time that I would lock in.
I have a question.
Okay.
Now, if you switch from variable to fixed, a lot of people were asking me if they will have to pay penalty for that, from variable to fixed.
Most lenders do not charge a penalty for that switch. But then again, I don't know, maybe there's that one-off. I've never heard or had a lender charge for that. But then again, there can be that one-off lender that would charge, but majority of lenders don't charge.
Yeah, that's good to know because a lot of home buyers or
That's something, yeah.
variable holders
That's
don't know that.
That's something to ask your mortgage professional who you're dealing with. It's like once they put you with a lender, just say that, hey, just to confirm, like if I wanted to do that change, is there a penalty or is there a fee, right? So most of the lenders I work with don't have that. So you can always lock it in. The only
That's good.
stipulation is, let's say you're locking it, you have a 5-year variable, and then it's year 2, you will have to lock in with at least a 3-year term or longer to honor the original contract, right? So
Okay.
you have
That's
yeah.
good to know.
Mhm. Okay, so
Yeah,
no, that's
3 to 5.
definitely a great question, and we needed to clarify that. Okay.
Mhm.
So yeah, so I think I just want to end it just to clarify the what determines the rates. On a variable rate, you follow the Bank of Canada's overnight rate, and for the fixed rate, follows the Canadian bond yields, right?
Mhm.
So because I get that question so many times. It's like, overnight rate drops, Bank of Canada, and then somebody's a fixed rate holder. They're like, did our rate go down? And most of the time it's no. Like, could it follow suit? Like, eventually, yeah, because that factors into the whole economy, right? And it affects the Canadian bond market, that drop. But it doesn't directly affect it.
That's right. That's why it's called fixed. You're stuck with it.
Well,
You
you know
know?
what? To be honest, I think it's also how our system works that I feel like yeah, when somebody hears, if somebody that doesn't work in real estate or mortgages, like hears, oh, the rates go down, that it went down, it's not really clarified if that affects them or who that affects, right? So I think they should put that out there, that it's
But I
like
think
and educate Canadians more.
But I think their mortgage broker or their lenders, if they are dealing with the banks,
Mhm.
shouldn't they explain that? That's a basic knowledge.
That's true.
Which
That's
rate do
true.
you want? Variable or fixed? Guess what? If it's variable, this is what happens. If it's fixed, this is what happens.
Yes, but
Like,
you know what? I guess you know what. Now let me take it back. It's up to the consumer to understand. Because now that you mentioned that, is because there's so many clients that explain that before I put them to a fix or a variable. But
I know you always explain.
as soon as that announcement comes, it's like we never had that conversation, which is fine. But I think that's the problem, is because if
Okay.
it's not in front of you all the time, and like you almost forget the conversations, and then you hear the news, and then you just ask, which is, I can always remind people, right? But like it
Yeah.
happens a lot. It's like, oh, and
Yeah.
then I just reply in like, hey, remember, by the way, like we had that conversation that if the rates go down,
Oh,
that doesn't affect you, and if you want to take
yeah.
advantage of that rate drop, you should go variable. And then they're like, oh yeah, that's right. So sometimes it's
Oh,
best
that's a
that I
good
put it
one.
on email. That's why it's best I put it on email when I tell them
Notes.
that,
Yeah.
so that
Email.
I
Yeah.
can pull it. Yeah.
No, you're
But yeah.
right. That's good. Because,
Mm-hmm.
because then you can track it, right?
Mm-hmm.
Yeah. Because it's situational and depends on their finance as well. There's so many things to consider whether they should choose variable or fixed, and then they forget. They're like, oh, and they get this is what's funny, because every time there's a Bank of Canada a rate announcement, the fixed holders are the ones super excited. I'm like, didn't you have fixed rate? Because
It
you
doesn't
will not
affect
be
you.
affected. Yeah, you will not be affected by it. Variable
Mm-hmm.
holders do. Yeah.
Yeah.
So, oh, okay. I'm like, oh my god. But
Wow,
yeah,
look at you being so proud of being a variable rate holder right now that you're announcing it, right? But when rates
right
were
now I
high,
am.
you like put your head down, right?
Thankfully, you've been giving me guidance. So you've been telling me, Tess, if you can hold off, just wait.
Mhm.
Thank God I waited. Yeah.
Well, yeah, I definitely want to, because I've had this conversation with people. Like I just put in, actually, I had one example of a client. I put them to a variable and explained to them, you have to be comfortable with volatility, right? But when rates went up 3, 4 times, they're like, hey, I don't know about this. And then they locked in at that point. And
So
then
that's good for
afterward,
them. Yeah,
it is good,
at that
but now
time.
they're asking me. It's like, oh, now what does it cost to break the mortgage, right? So for the most part, I think 90% of people that take variable, you have the risk tolerance to be able to go up and down
Mhm.
because that product works, and statistically you come up on top if you ride it out, right?
That's right. You got to be a risk taker, and you have to know your situation, basically. You know.
Mhm.
Yeah. At that time, that person that you were helping was doing very well, right?
Mhm.
Until because it went up like the last 2 years, it went up 8 times or 10. The rate. So good for that person. But now we're on the variable side now. So now I should
Mhm.
be happy too, because it's gonna favor me, hopefully, if I can lock it in time. So we
Mhm.
shall see.
That was just a quick explanation of what the tariffs are and how it's affecting the mortgage market, and what future projections are. Now I'll leave it up to you, Tess, to give us some updates on the February numbers on the real estate side.
Yeah. Okay. And I think next week will the March will be coming out as well. So, well, here we go. GTA home sales were down to all property types. Detached is down 31%. I think everybody sees it. It's all over the news, right? So again, sales were down on detached, minus 31% on that. Townhouse is minus 30%. Semi-detached and condos are the same at 22%. So all the sales are down. The average price were also down on not on detached. Okay, in this scenario, for the average price, let's see, the detached didn't go down. That's the only one that didn't go down. The rest, semi-detached is down 4%, townhouse down 2.3%, condos, I was surprised, it's only down 1.3%, right? New listings were up by 5.4%, resulting in a high inventory. And this is it. Active listings were up by 76%. That's a lot.
Wow.
I mean, this is great for buyers because it provides them a
There's
substantial
more
negotiating
inventory,
power.
right? Hmm.
Yeah. So, and then not only that, the variable rates are coming down too. So if you put that two into two, it's like a win-win situation, right?
Yeah, so you have more inventory, you have for the most part more buying power because rates are lower.
Correct. Correct.
So yeah.
The question is, you just have to find out if you are financially ready. If you have the down payment, I would say jump in, but we'll talk about that later. So the average selling price for detached is now 1.4. This is for February, okay? 1.4 for detached. Semi-detached is 1.08 million. Townhouse, 911,000. Condos, 688,000. Again, this is
This is
in
trend, right?
GTA,
Yeah.
yeah, Greater Toronto area in
Hmm.
February. I don't like giving the all types number. I like to go by detached, semi-detached, so that way you know the numbers.
Hmm.
Overall, there was a decrease. Now, this is the overall property types. There's an overall decrease of 2.2% compared last year. Not much, right? It's not too bad.
Just
Now,
quick question there,
yeah, go
Tess.
ahead.
So the condos are average. The average is 688. So
That's
because
correct.
that's considering, that's factoring studio, one bedroom, two bedroom, three bedroom. Is
Yeah,
that why the
yes.
average is still fairly
Yes,
high?
a
Yeah.
little bit
Okay.
high. Yeah, that's
Hmm.
correct.
Okay.
Yeah. But yeah, but then let me see here. But remember the sales for the condos is 22% down. It's down 22%. Same thing as
Oh.
semi-detached.
Hmm.
Yeah. And I thought condos had the highest reduction in sales, but actually I was surprisingly it's the detached is minus 31%. So it's down 31% on detached and 30% on townhouse, and it's only 22% on condos. I guess more people are just flooding and buying, condos, which is good because it's very affordable. It's good for first-time home
I,
buyer,
I
new
I
immigrants.
I guess that's the problem, right? Because the detaches are still not, even though it's gone down or it's slowed down, it's still expensive because
It's
it's
still
so
expensive.
yeah.
Anything over
Because
1 million is expensive.
yeah.
Yeah. So yeah. So the listing days on market was up by 12%. So it used to be 25 days. Now it's taking 28 days. to sell. Now, if you incorporate the termination, relisting in out of the MLS with the same property, it takes 43 days on the market.
3 days. Okay.
Last year, it's only 37. Okay, so that's so sellers. It's normal to not like not getting your property sold all the time. I mean, sold your
Right away.
property getting sold right away. It's just the market. It's nothing to do with, well, it's something to do with the price, of course, because that's important, and other things as well. So for buyers have significant leverage to negotiate on price and other terms of a deal. And buyers also have a wider selection of properties to choose from, increasing their chances of finding a home that meets their needs and preferences. Yeah, given with all this 74% increase in inventory, that's a lot of properties to choose from for buyers. They've been waiting for this, Pao. They keep complaining before. They're like, oh my God, it's so expensive. And so now they've been, the government put a stop on, I think, extra 2 years, right, for investors? So that, so Canadians can just start buying. And where are the buyers? There's so many now. Like the condos, like you can buy like a 1 bedroom, sometimes 2, for 400,000. You just have to look, like in Toronto. Yeah, like really, like go talk to your realtors, like, and find where you wanted, like what's your desired location, and tell them how much you wanted to spend. Obviously, you want to get pre-approval first to start, but there's so many deals out there. So if you're ready to buy, just jump in. The anticipated decrease in borrowing costs could improve affordability in the future, but you have to be mindful of what's going on, like what you said, Pao. On April 2nd, I guess we will find out. That's next week, right?
Next week, yeah.
So we'll see what will happen because it's all tied into that. Buyers may feel less pressured to make quick decisions and can take more time to find the right property, because there's, less competition, right? The market is uncertain. So if you're financially ready, like I said, you should just jump in. The rates could go up again because we don't dictate what happens to the market. It just goes up and down. And so if, like what we always say, if you have the means to buy right now, and just jump in, right? So I'll say for sellers face more competition from other homeowners trying to sell their properties. With fewer sales and more inventory, it may take longer to sell a home compared to the previous year. Like I said, now it takes 43 days in total to sell property. So that's really our norm. That's the norm now. But, overpricing can lead to prolonged market time and diminished interest. And I'm seeing a lot of sellers still think it's COVID time. They want their, I mean, everybody wants a higher number for their properties, but we don't make it up. We go with what's the comparable, right?
Comparables.
So So while accurate pricing attracts serious buyers and facilitates a quicker sale, it's important that that the buyers dictate a property's market value based on what they're willing to pay, not you sellers. So you have to be, how do you say that?
Realistic.
You have to be realistic, and you have to know what's going on in the market. You can't just say, oh, I want this because that's how much it is. That's how much my house should sell for. But, that's not how we price the
it's based on
property.
numbers. I think that's the good thing about us having a centralized, because we take it for granted, because like knowing how different countries work, or like, for example, the Philippines, there's no centralized system that tracks buying and selling homes, right? So people just kind of decide what the price of their property is. But in our system, it's like the MLS, you see all of the purchase and sales. So you have an idea what a comparable house is. But if you don't have a system like that, so I don't know, I guess
that would be chaotic if we don't have that. Oh my gosh, right? We have no source. We have no ways of measuring or do a comparison how much we price a certain property. So again, overpricing can lead to prolonged market time and diminished interest. A lot of sellers, they like to overprice their properties, and that's why it's taking longer to sell. Where they could just, listen to their realtor and just price it right the first time.
Mhm.
So in times like this, because it's a buyer's market, engaging a professional photographer to create a high quality images and virtual tours can significantly enhance the property's appeal. Staging the home, you don't have to, only if it's necessary, if the sellers want to. It helps potential buyers visualize the space potential. And additionally, simple upgrades like replacing kitchen hardware, because sometimes you have that silver and it doesn't really pop. But if you change it to a black hardware, in the kitchen, it actually makes a significant change,
Mhm.
appeal to buyers, right? If you
Mhm.
update the ceiling lights and applying fresh paint, it provides a modern, well-maintained appearance, making the property
Mhm.
more attractive to buyers. It
It
really doesn't
definitely,
cost a
yeah.
lot of money. You did that,
Mhm.
Pao, when I
Yeah.
sold before I sold
My condo, yeah.
your
Well,
condo.
it's
Oh my
easy,
God,
right?
what a
It's
big
yeah, like
change.
like you said, light fixtures, paint. Those are like definitely things that you
Yeah,
have to kind of update. I remember I even changed like the
the
vanity mirror,
vanity.
and
Yeah,
yeah, which made the big difference. You know.
yeah. And it's not that costly, we want to like for me especially, I want to make sure the sellers doesn't spend a lot of money. And that's why sometimes I even say, no, you don't have to upgrade that, just this. That's why it's important to see the property so that we can actually suggest what needs to be done. Most of the time
Mhm.
it's minor, and if it's major, then you have to prep it, get it fixed and everything, so you can get more for the property. So sellers should be aware of the downward trends as well in prices and adjust their expectations accordingly. This is crucial, right? Remember, we don't make up the numbers when pricing your property. We base it on the comparable of the sold
Mhm.
properties in the same building or neighborhood. Who doesn't want to, sell it at a high price? But
Mhm.
we have to stick with what sold statistics are showing us. And if it's
Well,
that's what it shows, then that's how much we are. If it's worth 1 million, you can't say 1.2, 1.1. No one is
well,
gonna even look at it.
yeah, because you have to be realistic. You have to put yourself in the buyer's shoes as well, right? If the buyer
Exactly.
knows that that house down the street that's the same size and upgrades are the same, sold for 1 million, how are you going to sell for like 1.2, right? So you have
I
to be
really don't
realistic, or
understand. I don't understand the way some sellers think. Like,
Mhm.
like
I,
it's greed.
I think
Like,
it is greed and also just their own experience, right? They don't have the experience. Like if that's their only house that they've ever sold, right?
yeah, but
So
that's why we're
they
here.
don't
That's
have
what
a,
realtor.
Mhm,
Yeah, that's why we're here for.
for sure.
You hire a realtor, right? And of course, not all realtors are created equal, right? You have to
Mhm.
hire the right realtor, and of course, you should. And I strongly recommend you should interview at least three realtors and see which one really works with you, and everything else. You should look at
I think
what
that's
they've
great.
done in the past.
I think that's great advice. Definitely find interview, like you mentioned, three. And then once you've
Yeah,
found the one,
yeah,
then you are hiring them for their expertise. So then listen
exactly.
to the guidance that you get once you've picked, the right one for you.
Exactly. I always tell my clients, I mean, my prospective clients, I always say, even if they haven't, like, if they tell me they are planning of selling, and I always tell them, can you please include me to be one of the realtors to be interviewed? Because
Mhm.
at least I can
You
present
can
what I need to, what I can offer them, of course, my experience, skill. But it's always good to interview at least three realtors
Sounds good.
to represent your buying or selling your property.
Sounds good. Well, thanks for that update, Tess. So I think before we go, I just wanted to kind of highlight some opportunities in the market or key takeaways from our conversation. I think you were talking about whether it's the right time to buy or sell. I think there's a lot of uncertainty for if you're an investor. I think definitely that uncertainty in the market, and especially right now in Ontario, I myself, like being an investor, I'm having a hard time running numbers that make sense, right? Because with rents going down, your cash flow negative in a lot of property. Before, when I used to buy real estate, I was like, 500 negative cash flow a month, but I know that the capital appreciation is there, then it makes sense. So, I'm losing, let's say 6,000 a year, but then it goes up in value with 50,000 a year, then I'm okay with that, right? But you're not seeing that right now. Right. So I would say for investors, you see the reason why people are waiting if you're an investor or looking for the right deal. But if you're buying a principal residence, as you mentioned, I'm a strong believer that it's the best time to buy is when you're financially ready and you qualify under the current rates, under your current financial situation. Because there's no point of you waiting and then suddenly either rates are up and you don't qualify because your buying power decreases, or if your employment is affected, especially with a lot of uncertainty in the market right now. Right. Keep in mind, tariffs and the mortgage disqualification can change. Lenders can change. Let's say, as an example, I don't know if this will happen, but it can happen. If you're in the auto industry and you're being affected by these tariffs, lenders can say that, hey, there's a lot of uncertainty in the market. We're not comfortable with qualifying people in that industry. So then that affects that whole section or a lot of people that are in that industry in terms of buying. That hasn't happened yet, but it can happen. If you're looking for a principal residence, I would say if you're qualified right now and then under this current criteria that the lenders have, you qualify for them, then yeah, what are you waiting for? Because especially if you're just renting, right, at the moment. One last thing that I was going to mention was with this decreasing rate environment, there's a lot of opportunity there for people that are on fixed rates. Let's say if you're above 5.5, I've seen a lot of opportunity there where we can drop the rate, like let's say 1%, like to 4% or like 4.5. There's a lot of opportunity there where the penalty that you're paying is definitely a lot less than what you're going to be saving, right? And I think I mentioned.
So it's really worth kind of like a change, like how do you say that, refinancing it, not refinancing, going into taking advantage of the lower rate.
Yeah, so if you break your fixed rate that you're at 5.5, 6%, let's say, right, and you break the mortgage and then you're paying 8,000 in interest, but then you're saving over 2 years, let's say 15,000, 20,000, which a mortgage broker or your mortgage professional can make those calculations for you. The one thing about this is because I know a lot of people are waiting on the sidelines, like, oh, I want rates to go down further. That I want to point out is those penalty calculations are based on what we call interest rate differential, right? And because in the current market is what we call an inverted yield curve, where the short-term bond rates or the short-term fixed rates are higher than the long-term one. So the 1 year, 2 year are higher than the 4 or 5 years. It's actually causing it to be you're paying the 3 months interest penalty instead of the IRD, that's when your penalties are lower. So the danger about waiting is once that flips, and then now rates can drop down to 3.5%, 3%, but then your penalty now is 20,000, 25,000, then those numbers might not work. So if you're above 5%, 5.5%, to 6%, it's good to at least do a review with your mortgage professional and see if there's opportunity there.
No harm in trying.
Yeah. Yeah, like to inquire about it doesn't commit you to anything, right? So it's better to just review it.
Yeah, exactly. Okay. Especially if it's savings, if it saves you a lot of money, down the line. Yeah, it's definitely worth it.
So that's everything for me, Tess. Anything else you wanted to add before we end the podcast?
Well, I just want to remind buyers that they should start talking to their mortgage brokers and find out what they are, especially if they're financially ready, meaning they have the down payment as low as 5%. First 500,000, right? It's 5%, so 25,000. If you have that plus the 1.5%, closing costs. There's so many deals out there. Start with a condo. You don't have to get your dream home now, but start somewhere. It's something to consider. Just see where you are at. If you can afford, and if you can't afford, that's okay. At least you know where you're at, and then you can save and plan for maybe 1 or 2 years down the line. I'm just saying it's a very good opportunity right now with the rates going down. They asked for this. They've been begging, like, oh, I wish when there's going to be like a more affordable housing. Yeah. very low right now. No one is buying condos. I mean, less people are buying condos. We're flooded with condos all over GTA. You can start with that. It's so affordable. You'll be surprised. So that's all
Well,
I can
thank
say.
you. Well, thank you, Tess,
You're
for
welcome.
your updates there, and also your where the opportunities, like telling us where the opportunities are at the moment. And until next time.
That's right. Looking forward to it. Until next time.